Hey, what's going on? Friday wrap up time. Happy Friday to you all. Well, they say pain is temporary, and I'm hoping that also applies to oil prices and interest rates. So we got another little bump this morning in the right direction, which is great. Israel and Lebanon announced a 10-day ceasefire. Iran is also opening, supposedly they're opening up the Strait of Hormuz. So we'll see if that actually goes through or not. But regardless, that was enough news to get oil prices to drop. And I'll show you how rates are responding as well. So this is the 10-year Treasury. If you're new to this chart, this is what I look at every single day. This is the 10-year Treasury, and this then affects interest rates, which we'll get to in a second. So, how to read this chart? Here's where we were when we started bombing Iran. We were down at 395 on the 10-year Treasury. Again, we're at 423. So, what has happened is obviously this big run up, and we are trying to get lower. So, red is good for us. Green is bad for us. Green means 10-year Treasury is going higher. So we are lower today, which is great. Now we got a long ways to run to where we were before when rates were cracking 6%. Let's look at mortgage-backed securities. Now the chart's inverted. This is where we were right when we started bombing Iran, and obviously rates have increased. We are gaining a lot of it back. We've gained over 50% from what we lost. If we can get above this 100-day moving average, we've got nothing in our way, so to speak, technically speaking, looking at the technicals, to get us back down to cracking 6%. So let's hope that this momentum holds and it gets us in a better position. So let's talk, actually, two different strategies I want to share with you. Let's talk about rates first. I'm telling my clients now about this to get them off the fence, because if they wait a couple weeks and the news of rates dropping gets it out into the masses, now our buyers are competing with other buyers and they're losing the ability to get seller credit. So now is the time to get out there, take advantage that rates are lower than where they were, and still get seller credit. Flipping the script to talking about past clients for a second. I just heard about two different top producing agents and what their strategy when it comes to past clients. I wanted to share it with you all. So most people that bought their house in 2020, 2021, some of 2022, did not buy their ideal home. There are ways that we can show these clients how they can sell with a lower interest rate, buy their ideal home at a higher interest rate, and yet still have their overall outgo or debt be the same, if not less. So let's start having those conversations with the past clients, give them a call, ask them if they're in their ideal home. If they're not, where would they like to be? Just start the conversations, because you get me involved and I can show the sellers how their outgo isn't really going to change. So if you got questions about that or anything else I've mentioned today, shoot me a text, give me a call. I'll be around all weekend if you need a quick pre-approval. If your buyer can't get a hold of their banker because it's the weekend, I'll be around. See ya.